What's going on, guys? Welcome back to another video. In this video, I've got another AMC update to bring all of you this afternoon. So what we're going to be covering in this video is we're going to be taking a look at the Ortex short interest and utilization data because there have been some changes that have been made to this data over the last 24 hours because we have received the new updated exchange reported short interest. Now, I think everybody remembers what happened last time we got these new exchange reported short interest numbers. And we saw kind of everybody have an adverse reaction to the fact that Ortex was overestimating their estimates for the short interest at the current time. The exact opposite has happened this time, so that is something that we need to take a look at. We are also going to be doing a little bit of options chain analysis because, as predicted, we are seeing a very significant increase in the amount of contracts being held at the current time as we go through the end of this week. Now, the main thing that we really need to cover in this update is what is going on with these new capital requirements. What is essentially going to be happening is they are going to be doing a high quality margin call. Now, I know, and every time somebody says the word margin call, a lot of people start to freak out. Now, I do want to make a couple of comments about that big bad word that a lot of people really do not like. One, a margin call just means you have to satisfy your liquidity or collateral requirements. So if you have that collateral, you can just put that money up and continue along your way with your position. But what has happened here is very interesting, and we're going to go over the exact reasons why and how it could affect the market going forward, especially AMC and GameStop and any other of these potential short squeeze plays that these institutions are wildly over leveraged on. So this is very bullish. And before we get into all of that information, if you enjoyed the information and analysis that I provide for you in this update video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video. Now, when we're looking at the chart of AMC today, it's down $1, down about 3% at the current time that I'm recording. Obviously, this is not really what we want to see out of the chart on AMC. Now, I brought this point up when I was on TMI's live stream a little bit earlier today. These time periods of a lot of uncertainty and some people losing a little bit of confidence is not something that we have not been through before. We had that dark period in March when we were bouncing around at those lower levels, and then what happened? We had a massive run up in June, but I really want you guys to think about a couple of key concepts. One, AMC is fundamentally getting better as a company. Two, the short interest is only getting higher, and we are still seeing a lot of institutional backing and retail investor backing going into AMC. So nothing is changed in terms of this short squeeze play, no matter what kind of FUD that you hear surrounding the internet right now. So when we come over and take a look at this Ortex update, let's refresh this page to get an accurate update here. Utilization 87.24. This increase from that 84% range is to be expected because of the fact that we did get this new exchange reported short interest number today, yesterday, 18.03% short interest as a percentage of the free float. Now, when we see what Ortex had to basically bump up its estimates to, we're now seeing the estimated short interest 17.15%. Again, guys, the shorts have not covered in any meaningful way. Now, coming over to the option chain over here, as predicted, the out of the money calls is starting to increase. If you guys remember from yesterday's video, this number was at about 156,000. So people are in terms buying the dip on the options chain and hoping for a rebound of AMC share price going into the end of this week. Are we going to see that? Who knows? We are seeing a lot of volatility in the share price, but you have to keep in mind that these weekly options are gambles and are something that you need to be very, very careful with. Now, let's get into this high quality margin call situation. And in order to start this off, we need to go back to a release that came out a couple of months ago. So the Federal Reserve Board announces the individual capital requirements for all large banks effective on October 1st. Following its stress test earlier this year, the Fed on Thursday announced the individual capital requirements for all large banks effective on October 1st, those capital requirements ensure that the large banks tested will hold roughly $1 trillion in high quality capital, meaning that the collateral and the capital that they need to hold on their balance sheet in order to maintain these regulatory requirements need to be as risk-free as possible, or essentially not risky assets. They need to be very, very high rated assets in order for them to qualify for that high quality capital requirement. Now, knowing that this has already been put into effect, the DTCC over this past week has released this statement right here. Beginning on October 29th, 2021, for the settlement date November 1st, 2021, the DTC will implement the following changes to modify the collateral value for certain securities, which may affect the value of positions applied to the collateral monitor. Now, what we see here, United States agencies and GSE securities that are not rated or rated AAA to AA2/AAA to AA will receive a haircut. Now, we're going to go over exactly what a haircut is, ranging between 5 to 30%. Those rated below AA to AA2 to AA will receive a 100% haircut. Now, I know this might be a confusing concept here. What is a haircut? Why are they talking about these different securities? What they're talking about here is bonds. Why does this really have anything to do with what we have? And how does this really affect this margin call that I have said before? Well, when we come over here, this is exactly what a collateral haircut is. A haircut refers to the lower than market value placed on an asset being used as collateral for a loan. The haircut is expressed as a percentage of the markdown between the two values. When they are used as collateral, securities are generally devalued, since a cushion is required by the lending parties in case the market value falls. So what they're saying here is that if you have, let's say, a security that you want to post a collateral of, and the security is valued at, or that position is valued at $100, and there's a haircut of 35%, then you are then only going to be able to use $65 out of that 100 as collateral. Now, the interesting thing here is that when we come back down and take a look at the chart of what exactly is happening here, anything that is not AA rated is essentially not going to qualify as collateral anymore. So if you are an institution that is using a AA bond, anything below a AAA rated bond, those securities are no longer going to qualify as collateral anymore, because the collateral haircut on these is 100%, meaning that none of that security, 0% of the value of that security is going to be able to be posted as collateral. So now what happens then if you are an institution that has been using these AA rated bonds to post as collateral? Well, you're going to have to figure something else out, or you're going to have to close your position. This is where the high quality margin call term comes in, because when we think about the actual bond structure in the credit ratings that Moody's and S&P gives out, we're seeing that the top ratings are investment grade and the risk is the lowest risk. Anything below here really is no longer going to be able to qualify as collateral. So they are going to need high quality collateral. And if they are not able to come out and basically put up that amount of collateral, then they are going to have to close their position. But why would this be happening now? What is going on in our broad market that would basically trigger the DTC to issue one of these collateral haircuts? Well, one, we all have an understanding of just how over-leveraged these institutions most likely are on their short positions on stocks like AMC and GameStop. The second thing is that when we look at the broad market, the margin debt is at an all-time high. There is a vast amount of leverage out in the market right now, and we know that leverage is a very powerful tool, but is also very, very dangerous to not only the markets and individual names in terms of stocks, but to the overall economy. The DTC does not want to see a massive economic fallout, especially with the fact that we are looking at Fed tapering coming in. We have that situation surrounding Evergrande kind of dying down, but there is still a lot of uncertainty out in the market right now. And if there is a vast amount of leverage, any significant move that we see in the market is going to be amplified. Now, we do have to really wait and see how much of an effect this is going to have, but we are going to see this come into effect in the beginning of November, and it's going to be very interesting to see if we see volatility start to pick up in the overall market. So that is going to wrap up this update on AMC. If you enjoyed the information and analysis that I provided for you in this video, make sure you go down and hit that like button. It costs you nothing to do it, but it really helps us out a whole lot in getting this information out to as many people who want to learn. And if you guys want to see more videos like this, make sure you hit that subscribe button and turn on that notification bell so you're notified every time I post a new video, so you get to stay up to date on all of your favorite stocks, learn about a couple of new ones, and see exactly which options I am trading and which strategies I am using to trade them. So I hope you guys are having a great day, and I'll see you guys in the next video.